Finance Minister, while interacting with the World Bank and IMF Staff Association and providing an overview of the continued stabilization measures that have been taken by Pakistan's government, talked about Pakistan's resolve to sustain growth by different factors. I'll name them: achieving fiscal consolidation, improving the governance and management of SOEs, reducing high energy costs in the power sector, raising productivity and competitiveness by creating a more favorable business environment for the private sector. How can Pakistan, in your point of view, because we've discussed that many times in the past as well, sustain these factors that are part of its economic growth?
Yes, I think this is a very important question, and I think the timing of our finance minister's visit is very good because you see these positive winds coming in the economy, and the fact that he can go and articulate the case to key stakeholders at this timely moment is very good for us. And as a part of that, you have correctly mentioned that revenue consolidation, business environment, and all these things are there. They are all important. Our level of progress in each sector is a bit different. So on the SOE side, you see the political will, which is very positive. On the revenue collection also, there are specific areas where work has been done, which is very good, such as the salaried class, which you and I are paying for. But for example, they're missing targets on traders by like 99%. They have missed it. And so the IMF is saying that, well, you have to focus equitably among all of the targets. So our finance minister going there will have to point out the successes as well as have consultations on the areas where the targets are not being met. And this is the balancing act he will have to play.
All right. The statement regarding the visit of our finance minister also talks about the discussions that are being held are centered around moving Pakistan from stabilization to growth. This is also what Dr. Sab alluded to. The Pakistan delegation has outlined several strategies to create more fiscal space. It talks about expanding the tax base. It talks about aligning the provincial agriculture income tax with the federal system, rationalizing subsidies, streamlining the government, and reducing costs in the energy sector. Can these goals be achieved while making Pakistan climate resilient?
This is an important point you're making, because if you're having to make all of these transformations, are you still keeping sustainability in mind? And I believe we are, because a lot of the things that are alluded to, the subtext as well as what is actually being said, are things that are of a reform orientation. Now that reform orientation may not require that much time. A lot of these things are putting things into practice by the stroke of a pen sort of thing. So then the stakeholders on the other side of the table are going to say, well, why haven't you done it yet? And so that's the balancing act that this government has to strike between inflicting more pain on the public in terms of fiscal austerity, that pain of austerity, as well as then meeting certain targets, because these targets were determined in a very different atmosphere. This atmosphere was around December and January, at the beginning of this year, where the global macroeconomic conditions were very tough. And so all countries were having to sign agreements that seemed to project out a very difficult atmosphere that is already going away. Now in Pakistan, for example, inflation has come down tremendously, and so the real interest rate is a very large positive number, probably a double-digit positive number. So now we have space to see, well, perhaps not so much austerity needs to be done, but then how do we balance that with the commitments that were made in a difficult circumstance? This is treading a careful balancing act, and I believe that that shouldn't be the attitude. I believe that you should make all the reforms possible now so that the dividends can be realized in the years to come. And so this is an opportunity like we haven't had perhaps in a generation, because things were so tough over the last 2 years, that you can probably have real meaningful change. Now it's expected that that is delivered.
Taxation, energy, SOEs, pensions, and government right sizing. In your point of view, how does a road to market strategy apply to an economy such as Pakistan?
Very important question. This road to market terminology comes from fixed income, from the bond markets, and it's the idea that when you are going out to raise capital, you have to have a business model, as Dr. Pervez said. Now, to pitch that model, you will have to do a bit of buzzwording, but you can't buzzword your way to prosperity. So ultimately, there has to be a viable, tenable strategy for how debt management, which is what Dr. Saab was saying, has to be put into place. Debt management being the single greatest priority. Debt management will therefore lead to capital markets deciding that yes, this country has enough space to leverage whatever we lend into growth, because that is how you would offset that. So if your growth rate is higher than your debt rate, then you'll be all right because you're channeling that into growth. So we have to then posit that this is the area where we will have growth. This is how we will reduce our current and long-term obligations, and therefore we can raise capital in an adequate manner from the markets, and then the markets will decide amongst a variety of countries that seek lending for various projects and say, okay, this one has a strong model, this one has something that it's using it for. Again, pitching the right ideas for the right reasons, keeping it transparent. This is how a road to market strategy works, both in the private and the public sector. So for Pakistan now, in order, you hear this cliche all the time about getting the house in order. There is some merit to that, because getting the house in order basically means that you create a nice pitch deck that the country is going to raise capital in this manner by managing what it already owes and using what it is getting to drive growth.
All right, thank you very much to Dr. Usman Chohan, advisor on economy with the CAS Institute. Thank you very much, Usman, to have joined us as well.